All right, today we're going to be talking about price bias in financial markets. So, why do we even care about price bias in financial markets? Well, it's because it is a variable that can affect the price of an asset. And anytime we can isolate for a variable that affects the price of an asset, we can make better decisions. So, another example of a variable that would affect the price of an asset would be structural flows. Bitcoin miners must sell Bitcoin to cover electricity costs, which creates sell pressure. Pretty straightforward, pretty simple. Another example would be incentives. So GMX, that's a decentralized derivative exchange that shares some of its trading fees with stakers of GMX tokens. So if trade volume for GMX increases, they're going to increase the yield for staking GMX, which incentivizes people to buy GMX, which pushes the price of GMX up. Makes a lot of sense. Another variable, and the one that we're going to be discussing today, is price bias. So, for example, Solana peaked at around $260. There's three digits in that price. That is in the hundreds of dollars. So anything under $10 just psychologically seems undervalued. And is more likely to get bid. We'll talk about this specific example later on, but I want to dive into the psychological behavior behind price bias in financial markets. So you have to understand that while some markets and market trading activity, even a lot of it, you could say, is executed by bots and trading algorithms, a large part is driven by human buying and selling behavior. Especially in peaks of high volume, there's a lot of people, human beings, sitting behind that buy and sell button that are making decisions. And when humans are making buy and sell decisions, they cannot help but be affected by bias. You cannot escape the human condition. So humans are very, very prone to bias of all kinds, including pricing bias. So there's three types of pricing bias that heavily influence financial markets. First is left digit bias. The second is price anchoring. And the third is rounding bias. So you're probably familiar with the first one. We'll just go ahead and jump into the first one to get it out of the way. But it's actually really important. So don't let me undersell it to you. So left digit bias. Research has shown that certain ways of formatting prices can spark a subconscious response from a customer and encourage a purchase. So this is like why for the longest time you could get a McDouble before inflation really kicked in. You could get a McDouble for 99 cents. Why was it 99 cents instead of a dollar? Well, it seems cheaper than a dollar, significantly so. This hypothesis suggests that people perceive the difference between $1.99 and $3 to be closer to 2 than to 1 because their judgments are anchored on the leftmost digit. So basically, with $1.99, we think that's close to a dollar, even though it's closer to $2. And 3, obviously, we assume that is $3. So the difference between the two seems greater than $1.01. It seems closer to $2 because we are biased towards looking at the leftmost digit because we read left to right. Now, obviously, that's a very common tactic used in advertising. But there's a really interesting paper, a research paper published in 2011, where they took a look at this across 100 million stock transactions, and they actually found that the buying behavior changed around even numbers. It really above and below integers, above and below half dollars, and below and above quarters, right? Were the most statistically significant differences. So feel free to pause and read this chart if you would like, or this table, for anybody who may be interested. What you really need to know is that these numbers, these even dollar amounts in the 50 level, as well as the quarter level, are statistically significant support and resistance level because of the human condition towards being predisposed to pricing bias. So this is because it's just basic left digit bias. To explain it one more time, $2.99 seems significantly cheaper than $3. So traders are more likely to bid on an asset that is priced at $2.99. But as soon as that price ticks up to $3 or $3.01, it's anchored to $3 instead of anchored to $2, right? So that buying pressure actually immediately subsides. So there's less buying pressure at $3 or above versus $2.99, and that causes resistance, right? If buying pressure is going down, it's harder for the price of the asset to go down. And likewise, or inversely, as prices coming down, right? Let's just say something's plummeting, a stock is plummeting from $5 down to $4, and then it hits $3, and it ticks to $2.99. All of a sudden, you have an anchored price of you were previously used to the stock being priced at $5, and all of a sudden it's priced at $2.99, but you anchor it to $2, right? Left digit bias. It looks closer to $2 than it does to $3, so you're more likely to buy, and then you've got support. So this left digit bias is especially strong when the tens place ticks up. For example, $10 seems a lot more expensive than $9.99 because the number is going from, that should say, 3 digits to 4. Oh, okay, yeah. This threw me off. Left digit bias got me. I was thinking this was only 2 digits and this was 1 digit. No, but we're actually looking at the entire number. See, I did it right here in this. I thought, oh, this is only 2 digits. Like I couldn't even help myself. No, so we were looking at something that's the numbers going from 4 digits down to 3 digits, and it seems significantly cheaper because you are losing a digit, right? So even in this example, I'm thinking I'm only looking at initially I was only looking at the left side. I was like, oh, this should say 2 and then down to 1. But if we look at the entire number, like, an unbiased person would, we're going from 3 digits to 4 digits when we go to $10. So that's super interesting. The fascinating part is that this has been reinforced through advertising our entire lives. So if it was not enough for it to actually, translate into financial markets the way that it does, we have seen so many advertisements of things that end in 99 cents or 95 cents or just a tick below that we are predisposed to associate prices ending in a 9 or 99 with images of sales and promotions. So as soon as that ticks down to 299 or 290 something, right, we're already thinking, oh, that's a better deal as a market participant. The next mechanism at play here is rounding bias. So we had left digit bias, we have rounding bias, right? At $2.49, we are anchored by the left digit and we round down to $2. So kind of a combination of the two things, right? We look at $2.49, and before we were kind of anchored to the left digit. When we were at $2.99, we kind of think more towards $2. But it's reinforced again, or it's even more prolific when we go to $2.49 because $2.49 actually is closer to $2 than it is to $3. So in our heads, we justify or more quickly round that down to $2, right? $2.49, $2.51, very uncommon numbers and difficult to do mental math and addition with. So it's easier for our brains to round those numbers up or down. And we're constantly, if you just think about how many times, especially if you work around numbers, or if you're looking at price charts of any kind, prices of any kind, numbers of any kind, your mind is subconsciously, automatically, without even telling it to, rounding those numbers up and down all day long, right? You go shopping, you're rounding numbers in your head when you look at prices. At $2.50 or $2.51, we subconsciously start rounding up to $3. Yes, we are anchored to $2 with the left digit bias, but when we cross over to $2.51, we see that our minds can start rounding this up to $3, which does seem a lot more expensive in comparison to $2.49, where we'd round down subconsciously. So in our subconscious mind, $2.49 equals $2, $2.51. Yes, we are anchored to that left digit, but we're also kind of subconsciously rounding to $3. And therefore, these two numbers that are only 2 cents apart, essentially the same value or the same price, are, in our minds close to $1 apart. And there's a big gap and disparity there. And that does create inefficiencies in the market. The next one is price anchoring. Price anchoring is a phenomenon where consumers rely excessively on a starting point or the anchor when making decisions. For example, and you see this all the time in pricing and advertising, a jeweler or a savvy salesperson, a jeweler may first show an engagement ring with a $32,000 price tag as the anchor, and then followed up by presenting a similar ring worth $19,000, right? So if you show somebody a $32,000 ring and then you show them a very similar $19,000 ring, all of a sudden, $19,000 doesn't seem so bad. However, if you'd have led with the $19,000 ring, you're $19,000. That's a lot of money, right? When you have an anchor of $32,000, it looks significantly less expensive. To the customer, the second ring appears to be a more reasonable and attractive option compared to the anchor, leading to a higher likelihood of making a purchase. So how can you use these concepts to your advantage when looking at markets, right? So I've got a couple examples here. We can go to the actual chart. I did make an indicator that is free. If you want to go to TradingView and just search Sistine Research price bias levels, I believe it should pop up. We're looking at Matic here, right? And these are particularly useful when we're in a period of price exploration. And ultimately, the market has to decide what's too expensive and what's too cheap. But early on in Matic's days, we had a level of 0.25 cents, or I'm sorry, 2.5 cents. And then down here we had 1 cent. And that's all this indicator does, is just marks out the quarter levels every factor of 10. Right. So 1 cent, 2.5 cents, 5 cents, 7.5 cents, 10 cents, and then, 25 cents, 50 cents, so on and so forth, all the way up. Once you've anchored, right, we have multiple things going on here. We've anchored price at 3 to 4 cents. And after Matic launches, goes to 3 to 4 cents. It comes down, and anything under a cent, right, looks super cheap. There's another zero in front of that decimal point, and 0.009 it's less than a cent. It looks very, very cheap. So it gets purchased and bids come in multiple times. Even in March of 2020, we barely went below this level after, the pandemic crash pushed this down. But once we've anchored below a cent and it goes up to 2.5 cents, that seems pretty expensive, because as soon as we go to there, we start rounding up. Right, 0.026, we start rounding up to 50 cents, right, to that next level, right? And then, the bull market comes around and we radically reprice, but then we go into price expiration mode. And where does this start to seem too expensive? Well, we catch our first big, kind of correction here at 51 cents. Why? Because we've anchored at, less than, we've come from below 2.5 cents. Most of the price action was here. So that's our anchor. Our anchor is between 1 and 2.5 cents. And now we're at 0.51. And our subconscious mind, right? Our subconscious mind says, oh, that's $1. It starts rounding up to $1. That's closer to $1 than it is to the anchor, right? And that seems super expensive. And this FOMO starts to subside, and you get this nice correction. Right. And we see this happen time and time again across multiple assets. You can throw this indicator on just about any asset, and you're going to find some, plenty of examples. We'll go through Solana here in just a moment. Same thing happens at 251 twice. Right. We got essentially a double top there. And yeah, we went up to almost $3, but very little price action and could be sustained above 251. And yeah, there's obviously other variables in the market that are affecting this. But as soon as we tick up to 251, that seems significantly, and this was one of the examples in the slideshow, it seems significantly more expensive than 249, right? So it's very difficult to sustain that buying pressure once we go above 251. And then once we crash, and again, we have our anchor here. We were just at $2 to $3, right? We spent a ton of time above $2 to $3. Once we drop below 50 cents, right, it gets bid up, because once we go to 0.49, that seems super cheap. That's really close to zero, right? We round that down. That's really close to zero, right? So that seems super cheap. And yeah, we had other variables in the market pushing this price all the way down to 31 cents. This wasn't the end all be all support range, but you get it. Like it seems Matic seems super cheap below 50 cents psychologically, and that's going to help people bid it. Eventually a bottom has to come in, and it's going to be where buyers start coming in, and where buyers start coming in is where they're going to feel more comfortable and confident buying. And a lot of that's going to be driven by bias and psychology. We just spent a ton of time for Matic ranging between 75 cents and $1, right? Once we've anchored at 33 cents or wherever we bottomed out here, right? Once we've anchored this low, over $1, over $1 seems very expensive, right? It's 3 times where we just were, and we're adding a digit. We're going from 0.8 8, 9, or whatever, somewhere in this range, we're adding a digit. Now you're paying what feels like a premium. It's the same. It's no different than like Taco Bell's 79, 80 cent, 89, $99 menu or value menu, right? If you're used to paying, 79 cents for a chicken burrito, and all of a sudden it's a dollar and 2 cents, like that looks so much more expensive, right? So some of these psychological decisions can lead to some of these the resistance that we get around this level, and it's been researched and proven by that paper that I mentioned in the slideshow. So like this, actually is a thing. And it's statistically significant. Look at Solana just recently, $25, very difficult, right? Why? We've anchored down below $10. And as soon as we tick up to $26, that seems super expensive. But at the same time, the leading example in the, at the beginning of the video we talked about was like, once this is anchored at 260 in people's minds, right? 260, and it really topped out at like we couldn't sustain price action above 250. Why? Because 251 and 249, right? 251 seems super expensive. Buy pressure draws down, right? We get that initial support at like $75, which is another interesting level. But then once this goes down from being anchored at something that has 3 digits in it, $260 or 250, whatever, even we spent a ton of time above $100 and a ton of time anchoring people's minds in this, over $100 3-digit region. Once we go down to single digit, and obviously we have a decimal point and we go down to like $9.80 or whatever. Yeah, we still have, 3 digits. So, you could say 79 or whatever. You could say it's going from 5 digits to 3 digits. Or, just to the left of the decimal, it's going from 3 digits to 1 digit, right? So anything under $10, like people feel extraordinarily confident psychologically buying Solana there because it's cheap. It is very, very cheap there. And you see this like even on the way up, this $50 level was resistance. We tick up to 51, right? That seems expensive. These levels are all over the place. So if you want, go check out that indicator. It's free. You don't have to pay for it. Just search within TradingView Sistine Research price bias levels. And if you enjoyed this video, please do like and subscribe, and then go check out Sistine Research. Join the research hub. Our goal is to identify asymmetric risk reward opportunities in the crypto market and present them to our clients. So we've had some great research papers. D-Gods and Utes have been going nuts since we put this research report out. Arweave as well. Big fan of Arweave. We did a deep dive on it so you can actually understand what you're investing in when you invest in Arweave, and whether or not it is, a bullish or bearish narrative. Blockchain gaming deep dive report. I believe this was like 18 or 19 pages. A lot of great stuff when it comes to navigating the blockchain gaming space. A lot of people are going to make money in blockchain gaming, but a lot of people are going to lose a lot of money if they don't know what they're doing when it comes to analyzing these projects. We've got some shorter term opportunities that we continually update, some principles, which are just really, really solid educational content. And we do have an airdrop guide section. And the goal here is very simply to pay for your subscription, right? We want to, there's no guarantees here, but hopefully, right, if we can qualify people for these airdrops, we can help people offset the cost of a subscription so you get all this research essentially for free. So if you want to go check that out, it's at sistine.ai. There's a link in the description. Thanks so much for tuning in, and we'll catch you next time. Bye.